All right, so we finally successfully finished our first journal entry into Coffee Cafe. So let's go ahead and continue reading on forward. So the next thing that happened on the same day is we applied for a line of credit at the main bank. Okay, we just applied for a line of credit. Is there anything we can do? Do we need to record this transaction?
No.
Not yet, not yet.
Okay, good. We only applied. We don't know how much we got approved. We don't have any information, so okay. All right, same day, June 4th. We sell our furniture for $2,000, okay, cash. And we request a new ledger account to record the loss. Okay, so in this case, I created an account called miscellaneous suspense. Okay, since I'm not quite sure what I want to do with this money just yet, so we're gonna go ahead and dump the remaining money in there. So what was our original cost of the furniture? How much did we purchase it for?
Oh,
4,000.
Okay, good. Okay, and we sold it for how much cash?
2,000.
2,000. So where does the remaining $2,000 go?
Oh, we sold it. Okay.
In my pocket.
Well, technically, in this case, I don't know where to put it. So I don't know where this money is. So I'm just going to go ahead and just create an account for it. And I called it miscellaneous suspense. And then when we move later down into our scenario, that's when I'm going to be like, okay, I know what I can do with it now. Okay, so in this case, I want you to record loss on sale of an asset because we originally purchased it for $4,000. However, I sold it for only $2,000. So I lost $2,000 out of the furniture I've sold. So in this case, I want you to still journalize this. So journalize exactly how it is written there. So 6/4, okay? And since I know I sold the asset, right? I no longer have the asset. But what did I receive? I received cash.
Yes.
So checking. All right?
So on June,
Okay. I have an account called miscellaneous suspense. And we basically, in order to do that, we had to sell our furniture. So we no longer have that furniture anymore. So we need to create a credit account, in the account for furniture because we sold our furniture.
what is that miscellaneous
Suspense.
suspense?
Oh, I spelled that wrong.
Oh, that's okay.
Suspense. Suspense. There you go.
Suspense, okay.
So like I said, it's in the air. I don't know what to put. I don't know what to do with this. So I'm just gonna put it in the air. I'm just gonna put it in a random account. All right, and I need to indicate that this was a loss on sale of furniture, right? Asset furniture, yeah, of furniture.
Yeah, furniture.
Because I sold my furniture. I don't need that furniture anymore. Okay, so here I'm gonna go ahead and look up my accounts for these things. So go ahead and go to your chart of accounts.
Oh, okay.
Okay.
Checking is 10-100.
Okay.
Miscellaneous suspenses.
Miscellaneous. Yeah.
Yes, it's the very last account in assets.
Oh, okay, the miscellaneous suspense.
1999 0.
Yes. And my furniture.
And furniture's 3,000, wasn't it?
13,000.
Yeah, 13,000.
Yes.
Oh, that's close.
Yeah.
It had a 3.
All right. Okay. And then let's go ahead and do our debits and credits. So I know I received $2,000. Okay. And I know, and I know that my furniture that I originally purchased it for was at least $4,000. So I know that my remaining, if I subtract 2,000 from 4,000, I should get my remaining should be $2,000.
Yes.
Right? Okay. So now I completed this journal right here. Okay.
Oh, suspense. 2,000.
Okay. Now the first thing that we did is we received cash. What are we gonna do with it?
Put it in the bank account.
Exactly. So here I'm gonna go to my deposits.
Yeah, I wanna go with deposits. Okay.
So my deposit was for $2,000, and I made it on the 4th.
I had the deposits.
This is being recorded, right?
Yes.
Okay.
I don't know what I did with my deposits.
Oh, I'm sorry. I think I said you only used it once, so I lied. You're gonna use it like
You said what?
I think I said you only use it once, but in this case we used it twice. Yeah, sorry about that.
It's the 3rd page under bank
Yeah.
receipts.
I found it, yeah, I found it, thank you.
I had to think too where the deposit
Yeah.
was.
I have so many papers on my desk.
I have a pile for each thing.
Yeah,
Okay?
so do I.
So every time she calls out something, I look for the pile.
So for receipts, we're putting in the 2,000.
Mhm.
Yeah.
for today.
And then we deposited and we deposited that very same day, so it's gonna be for 2,000.
Okay.
Okay.
Four, 16.
All right. Then we can go ahead and move to our ledger account. Our general ledger. Okay, so I'm gonna start from the very, very top since that was the first thing that I received. I received cash, right? So I'm just go all the way to the top. So I'm at checking.
Yes.
Okay, I'm gonna go ahead and indicate the date, June 4th. And I'm gonna write sale. Well, I'm gonna write cash sale
Sure.
on furniture.
Cash sale on furniture.
And what I remembered I journalized on my first page of my journal.
Yes.
And did I debit or did I credit my account?
Debit.
You debited by how much?
2,000.
2,000. Okay. So, for those who have Excel, this is how you do the formula. So, in the cell right here where I'm in my normal balance for debit, I'm going to go ahead and equal. I'm going to go the previous number. I'm going to add my debit, and I'm going to subtract my credit to give me a running balance. Okay? For people who are doing the Word, this is saying, okay, if my original start now is 21,625, I just debited my account. Did I increase it or did I decrease it?
Increase it.
If I increase it, then I add them together, right? So if I add these two together, I should get $23,220 at 625.
Oh, yeah, so that's how you're doing your running balance.
Exactly. And if you have Excel, you'd be able to take this and be able to click and drag this little triangle here to apply the formula all the way down.
Okay.
So now my running balance will always be, right now I have currently, as of the 4th of June, I have 23,625. Okay, let me double check. Yeah,
Do you want to run balance every day? All that?
Yes, that's the whole point of a ledger account. You're going to be knowing the amount in each account at any given time.
Okay.
And you're right, Excel will do this for you. So
And
you don't
yes.
have to constantly write it in.
Yes. And for the sake, because what I did for my previous class is we did the word together and I had them sit there calculate this through the calculator. So what in this case, since I have it readily available, I just need you to understand the concept is we have a debit balance. We added, we just entered another debit balance.
Right.
So therefore we need to increase our bank account. So it's the same thing, okay? We started out with 21,000 in our bank. We just added another 2,000. So now we have 23,000.
Right.
Okay? Just think of it that way, okay? All right. Now we have to go down to miscellaneous expense, which is going to be, I wonder what page that is.
Uh, I know we had it once upon a time, didn't we?
Yes, so in your ledger, it's going to be
Page 9?
page 15.
Okay, then we just had
Actually, I lied. Page
16.
page 16. Yes, thank you, David.
16.
Page 16 under Goodwill. Okay, miscellaneous.
Miscellaneous.
What I meant is like the account is under Goodwill.
Oh, okay. All right.
Okay, so yeah, page 16 is the last
Okay.
account on that page.
Oh, okay, the miscellaneous expense, okay,
Correct.
okay.
So I'm gonna go ahead and go back to my ledger account here, and I'm gonna scroll all the way down since this is my Excel sheet. So here, miscellaneous expense, I'm going to indicate right here on June 4th. Okay,
Now, this is on our ledger, right?
this is the ledger, yes.
Yeah, okay, good. Ledger.
Okay, loss on sale of furniture. Okay, and I'm going to indicate that this was on my general journal number 1. The transaction is there. And did I debit my account or did I credit my account?
Debit.
And I should have a debit running balance because I started off with 0. And if I increased with a debit, therefore my balance should be a debit account. A balance.
Yes.
Okay? Good. It's also for you to also know is that generally most assets they will have a debit balance. Okay?
Right.
So now we're gonna go scroll all the way back up because our next account is going to be furniture. Furniture. Where is my furniture? So I see my
I'm looking.
I see my display shelves, my counter,
Sheet.
my desktop, my bistro tables. Here, I found furniture.
What page? Oh, it's not 9.
Page 9.
Yes,
So 9,
yes. Page 9 in the middle.
Yes,
Furniture.
page
uh-huh,
page 9 in the middle. Yes. Good. Okay, so furniture. Now, the reason why I put this in the main account furniture is because I don't actually know what I bought. And I don't care for it because I'm going to sell it off anyways. So this is exactly why we're putting it in the main account under furniture. Because at the end of the day, we end up zeroing out the count. But when I do make more purchases, as you could see under the main account, you could see that I'm going to be purchasing a table. I'm going to be purchasing a counter. But for right now, my main goal is to get rid of this furniture. I don't plan on keeping it, so I'm going to make sure that it's going to be under my main account. So on 6, 7, I'm going to say sold furniture. Sold. General Journal 1, and this time, what did I record it as? Did I record it as a debit or did I record it as a credit?
this
Credit.
time it's a credit.
This time it's a credit. And same thing here. We're gonna say we started off with a $4,000 debit. we're going to add the debit, which there was 0, and we're going to subtract the credit, which is 4,000, to get 0 or a dash because I used the accounting commas. So therefore,
Yes.
my account in furniture is 0. There's nothing in there. Yes.
So we sold it for 2,000 though, why do we have it for 4?
What is the rule for what is the revenue reckon? Yeah. Debits and credits have to balance,
Yes.
but also what is the historical cost principle?
The 4,000,
Yes.
The 4,000.
okay.
Yeah, unless you're selling half the furniture and you're keeping the other half of the furniture, then you can split it in half.
Oh, okay,
But in this case, we got rid of the furniture completely.
yeah, right.
Okay?
Okay.
So we're not worried about the loss that we got because we already recorded that.
Not yet. We haven't really recorded the loss just yet.
Oh, okay.
Okay? Okay, so now that we finished that, okay, good. We entered in our checking, we created our miscellaneous expense, and we just calculated the end of our furniture. So we're done there. Okay? So let's go back.
Write this account off, or we have to always leave it there?
That it is. Once
It is written off.
it's already 0.
Well, I know, but I mean, do we have to keep account of it all the time, or in our chart of accounts, just erase it?
Who has the ability to change the chart of accounts?
The accountant.
Are you the accountant or are you the bookkeeper?
I'm the bookkeeper.
Okay, so did I say you can delete it?
No.
No.
That's what I'm asking.
Exactly. So, and on top of that, we use this account in QuickBooks. Can you delete this account?
No.
No. Good.
The account's been used.
The account has been used.
It could just be zeroed and put in the mothballs,
Exactly.
in the BIOS, in back of the file cabinet.
Yes. Yes. It's going to be. It's always going to be remain as 0, or you can inactivate the account.
Yes.
Okay. So again, any account that you use, even in your chart of accounts, same thing applies. If you used it, you cannot delete it, because if you delete it, that means you're wiping out this entire transaction as if you never bought the furniture. Okay. So please, and then on top of that, it's a main account. We are purchasing other furniture in the future, so we need to keep that main account open. Okay. All right. So so now that we finished our transaction number 2, we can see that we moved on to the next day. So Wednesday, June 5th, okay, rent to landlord properties. Okay, so we have to rent out the property. We need to pay 4 months rent in advance, okay? And so that means we're going to be renting for the month of June, July, August, and September, okay? And then we need to have a rent deposit, because most places, you even if you rent out a property, they're going to ask you for a deposit, right? And usually the deposit is either the 1 month's worth of rent. Okay? So that's just in case for anything that happens to the property, whether it's damages, it just takes right out of it. So this is true as what it is today. Now, because we are paying for 4 months in advance, we also have to assume that out of those 4 months, we're going to pay for rent expense for that month. Meaning, on June 5th, we're going to pay for the 3 months in advance, and we're going to utilize 1 month. But in total, the package is for 4 months. Okay, so in this case, we're going to break it down to say that, okay, well, rent expense, okay, if we know that 4 months of rent is $6,000, how much is rent for 1 month? 1,500. So we're going to record 1,500 for the first months of expense, so for the month of June, and we're going to prepay, which is have it in advance, okay? Because we're paying in advance, right? We're paying for service that hasn't occurred yet. We're gonna adjust it every month to say that, oh, we already paid for this property. So we're gonna record 4,500 because we're using 1 month out of the 4 packages at the 4-month deal. And then lastly, we need to record our deposit. So in grand total, we need to write a check out for $7,500 for rent, for just rent in general. Okay. So let's go ahead and record this. Okay.
This is on what day, June 5th?
June 5th.
June 5th?
Okay. So first thing that we gotta recognize is we got rent expense. Second thing that we have is a prepaid.
Deposit.
No, prepaid accounts. And then lastly, we're going to go deposit. And then, of course, how are we paying this? We're going to pay it by check. So we are going to have checking in our account. All right. So before we do our description or anything, let's go ahead and double check with our chart of accounts to match our account names with the account numbers. Okay. So my checking is 110. Let me see. My rent expense is going to be
I'm looking.
Oh, expenses are on the other page. Rent
Yeah,
expense is, where the heck is it? It's 62,
6,200.
62,000. 62,000 is my rent expense. Okay, good. Now, where can I find my prepaid accounts? Hint, it's an asset.
yes.
Okay, it's an asset.
Yes.
Their deposits.
We're looking for the prepaid, is that what you're,
Prepaid accounts.
yeah. Prepaid, okay.
Paid account. That's 18,600.
18,600 and my deposits is 18,700.
Yes.
Okay?
600.
Good. And then lastly my checking is 10,100.
Checking 10.
Okay, so I'm going to go back to my journal and I'm going to go ahead and fill this information in. So my rent expense was account number 62,000. My prepaid accounts was it 18,600 and my deposits was 18,700. Okay? And lastly my checking account is 10,100. Okay? And let's go ahead and fill in our debits and credits. So all expenses are debits. So I have 1,500 here. I have 4,500 here. I have 1,500 for my deposit. And in grand total, it should equal up these. Now you can go ahead and enter the formula just to ensure that the calculation is correct. Or you can manually add it up. But I know for sure this is going to be 7,500. Okay? All right.
Answer me. Answer me. I said
I'm
answer
sorry.
me.
Okay. All right. Now,
Let me see.
go ahead.
No, it was just, 7,000, we said,
7,500 for checking.
7,500.
Mm-hmm. Okay. So,
According to the journal.
Huh?
we do the ledger next.
not yet. Not yet.
Every time we do the ledger, right?
Not yet. What's our first thing that we need to do? We're missing our description. Right? Okay.
Check number 1501.
Perfect. You need to go to the check register. You need to write that check first. So you're going to go to your check register and you're going to indicate, okay, my first check I'm going to write for the day is 1501.
Now I gotta find the check register.
So 65. All right.
And, rent, there's no property.
Yes, there is. Who is the vendor? Who are we writing this check out? Huh?
We are, to, our bank is,
Bank.
No. No.
Landlord.
Landlord Properties is our vendor.
property.
Huh?
I thought we
The
bought.
landlord.
We didn't buy property.
Oh, we didn't buy the property, we just bought the business, that's right.
Yes.
I knew we
we
bought something.
we bought the business and we bought the license, but we didn't. Now we're renting out the location because just because we bought the items,
Yeah.
do we have a store location? Did we buy the store location? No, we didn't. We just bought the business name.
We bought the business.
Yes.
Yes.
Okay, so we're gonna write this check out to who?
Landlord properties.
Landlord Properties.
Oh,
Okay.
what's in there?
Huh?
Oh, yes, oh.
That's the first thing. Rent to
I see it,
Landlord Properties.
yeah, I see it now.
Okay. And we know that it's the check number for 1501. Okay. So, how I like to put in my description is going to be, right? I'm going to go ahead and go back to my journal. I'm going to indicate 3 things. Number 1, the vendor, which is my Landlord Properties. Okay? Second thing I'm going to do is what did I use Landlord Properties for? I did 4 months rent. Okay? And lastly, what check number did I write? I wrote check number 1501. Okay? Now in this case I didn't indicate my what I did. But that's okay. Again, I can modify it because I'm the accountant. So I'm telling you, I want you to change it. I want you to put 4 months rent so you know. 4 months rent, and I wrote it with a check number 1501.
That's in our remarks, okay.
Mm-hmm. All right. We wrote a check. Okay. And we finish our description and we know that it's for Landlord Properties. Okay. So now we can go to our general ledger. Okay, so general ledger. I'm gonna go, what's the first thing I have? Rent expense. So if I go to my expenses, so for
2,000.
what is
62,000.
the account number?
Yes.
Okay, so for those so it's going to be page 39.
What's our page?
39, page 39.
General ledger.
It's the very, very last page. Top of the very last page. Rent expense. Okay.
Okay.
So yes, so here we are in our ledger for expenses. Oops, I'm in revenues. Keep going. So expenses. So I know that it's going to be
Rent expense.
rent expense, utilities, rent expense. Okay, oopsies. Nope. Keep going. Rent expense. Here you go.
What
Yes.
page do you see that on?
For you guys, it's your very, very last page, 39. 39.
39.
Last page.
Oh, last page.
And,
Sorry.
right in the check number, right?
Oh, I see
Uh-huh.
it, I got it.
Okay. So I'm going to indicate that this rent expense is rent for month of June. Okay.
Okay.
Where's my post reference? It should have been on my
Are we
first.
still on page 1?
Yes, we are. I believe so. Let's see. Did I finish? Yes, I still have a lot of page 1 left.
Okay.
Okay. So yes, so page 1 is where is my reference point. And I know that expenses, I paid $1,500 to my expense. So I should have a $1,500 dollar debit balance. Okay?
Okay.
All right. What's next? Prepaid accounts. Okay, so I'm going to go to my prepaid accounts. I believe it's page 16 under no, page 15 under deposits.
15, okay. Yeah, prepaid accounts.
Okay?
It's June 5th.
Prepaid accounts. So June 5th. June 5th. Okay, I'm gonna write here three months of rent. Right? Because I already used 1 month already. So I have prepaid right now in advance 3 months. And it's still gonna be general journal number 1. And how much am I prepaying it for?
4,500.
4,500. And I'm going to highlight this. And I'm going to change the format of it.
Okay.
Okay, so 4,500. Perfect. Now, if you actually go down to the bottom, right underneath that account is your deposits. So I'm going to go ahead.
Page. Oh,
Is it the next page? 16?
Next page, yeah.
Okay, so 16 on the next page. So you can indicate on June 5th that you had rent deposit. Okay? Oopsies, there you go. Rent deposit, general journal number 1, and it was for 1,500. Okay? Mm-hmm. All right.
and next is checking.
Last is checking. Good. So very first page under bank is checking. And this is for June 5th. Okay. And I'm going to go ahead and write check number 1501. I don't really need to indicate the landlord or anything like that, just because if I just write check number 1, I can just look that up in the register and find that I paid for rent. So I'm just going to indicate the check number just so that I know what happened that day. Okay?
7,500.
Okay. Is that a debit or is that a credit?
A credit.
Credit. So is that going to increase my account or is that going to decrease my account?
Decrease your account.
Decrease. So we started off with 23,625. What's going to happen when I decrease it by 7,500? What's my balance going to be?
It's gonna go down 16,125.
Right.
Yes, good. 16,125. Now, because I entered in that information and I did my punch in my formula, right? I did 1 above, add my debits or subtract my credits, and I get a running balance. So now my new balance as of June 5th is going to be 16,125. All right.
I'm checking.
Okay, so again, because we wrote a check, we're spending money, so we're crediting it. So this is why, this is the whole idea of how the flow of transaction works. If you received money, you're increasing your checking account. If you're pulling money out or subtracting money out, you're going to decrease your account with a credit.
Yes.
Okay.
Right.
All right.
So we brought that all the way down. Okay.
All right. I'm gonna give Andrea a few. Wait, did you? Are you? Are you
Yeah,
caught up?
I finally found it. It was underneath it, and yeah.
Okay.
So I got my check number, 1501,
Perfect.
general 1 and 7,500, and then minus, and that 16,125 is our running balance.
Perfect. Okay. So then it says here, post to subsidiary ledger. Okay. Remember, who is landlord's property? Are they a customer or are they a vendor?
Vendor.
They are a vendor to us. So this is where I told you the third batch of things that you need to have is your customers list and your vendors list. Now, I don't know what page it is on, but they're all in alphabetical order. So the first page or the first two pages should be your customers. And then everything else is all your vendors. And they're in alphabetical order. So we're looking for landlord properties.
Oh, okay, I see the vendors.
Okay. Here is landlord properties. Okay. So in 6.5,
Landlord properties, okay.
notes.
Properties are a vendor. This is on June 5th.
Can we just write check number?
Yes, you do indicate the check number here. But what I'm going to indicate is more details such as what this entire thing is. It's 4 months rent and my deposit, and I wrote for the check number 1501. Okay. Now,
Okay.
question is there an invoice number? In this case, no, it's not in the description. It's not given. It's more of a contract, right? You sign the lease. You give them cash. There is no real receipt. Okay, that's fine for now. But when we do look at scenarios where you will be given an invoice, then you have to put in the invoice here. Okay. Post reference here is also going to be the general journal number. So general journal number 1.
Answer me. Answer me. I said answer me. I'm not gonna take no for it.
Okay.
Hello?
Due date. Due date. There is no due date, right? Because you've already paid in advance. Okay. Now the next person says prepaid amount. Do not type this in because we did not prepay anything. Okay? We didn't pay in advance per se. The total bill that we're receiving is for $7,500. Now, if we were to pay, let's say it was for the total grand total is for $7,500, right? And let's say we paid in advance by sending in a check for $1,500, and then they charge you for the rest. They send you a bill saying you owe this amount. Then that's considered a prepaid account under this form. Okay? But in our terms, it's because we're making an advance payment for rent. But in this case, we're not doing that for this because we paid the whole thing off. There's no purpose to create a prepaid account if you paid the whole thing already. Okay, so we're gonna skip that and we're gonna go to invoice amount. Invoice amount was $7,500. Okay, that's how much they charged us, and that's how much we're gonna pay them. Did we return anything? No. Did we discount? No. Did we make a payment? Yes, we did. For $1,700. And then lastly, I'm sorry, $1,700. I'm sorry, $7,500. $7,500. Okay? And then the last account is going to ask you, do you have an accounts payable account? No. Reason being is because we've already indicated that we paid already the whole thing. So what this formula is going to be is it's going to be equal your invoice amount, right? You're going to subtract any prepaid amounts. You're going to subtract any returns and allowances. You're going to subtract any discounts. And lastly, you're going to subtract your payment to indicate that I owe nothing in this account, okay? Now, let's look at an example. Let's say I didn't pay. With that same exact formula, it's going to show that I owe $7,500. Okay? But because I did pay and I paid for the full amount, it's going to show that I don't owe anything. So in this case, we didn't even touch our accounts payable account. So we know that we paid for the full amount. So this is how you indicate it like this.
Oh, so we're not owing anything.
Okay.
Yes, we're not owing anything. Okay? All right, and this is with the subsidiary ledger. This is how you keep track of your invoices, any bills that you need to pay, all of those things, etc., etc., etc. So when we get into more further down, when we make more, when we make our purchase orders for inventory, this is where we're going to be receiving bills and creating our accounts payable. All right, good. Okay, let's see what happened next. Okay, now that we dealt with rent. So the next thing says that we hired Kim Robinson to do interior designing consultation.
Okay.
All right. Do we need to record this transaction?
No, it's a console. A console.
Not yet.
Yes, not yet.
Have a console.
We're just getting
No, not yet. We just have an inquiry.
exactly. And the second thing is there's no dollar value. She didn't bill us anything yet. We didn't receive a bill yet. Nothing has occurred. All we did was hire her.
Yes.
There's no transaction going on. So good. So now the next thing that happened is we purchased from Computers R Us. All right, so we went to a store called Computers R Us and we purchased, what did we purchase? Let's look at the list.
Computer, a printer, a copier.
Yeah,
Mhm.
yeah, no copy.
And because we bought it in the store, we got hit with sales tax. Okay. And then at the bottom, it says that we wrote a check for $1,502. Now, what do we know about assets?
They depreciate.
They depreciate. Good. But what else? What's in the cost of an asset?
Everything.
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 So, can we record the computer as $1,695?
No.
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 We need to divide the sales tax because there is tax on that item. So how do we do that? Are we gonna take the $238 and just divide by 3?
No. we're
No.
going to Take the 1695 times 8.25%.
Exactly. Exactly. So in our journal, let's go ahead and do that. So in our journal, we know that we're going to recognize on June 5th. Is that right? Let's look at our receipt. Yes, on June 5th, okay? We recorded what? We got a computer,
Yeah.
right? It's an asset, right?
Yes.
What kind of asset is it?
Current.
What makes it current?
Did you use it now?
Mm, Okay.
Accident, it's equipment,
It's equipment. Good. Yeah, good job. It's an office equipment.
right.
So, therefore, it is what kind of asset?
It's a,
Equity.
Not equity.
Oh, I mean, a fixed asset.
It's a fixed asset.
Mhm.
So here I'm going to indicate computer, printer. Oops, I don't think I put printer in there. Print, Printer, and copier.
That's
Okay.
usually the same thing, a printer and copier?
No.
The
Yeah, it can be.
it can be, but the purpose of a copier is you make copies of stuff. You can
Printer,
print off a copier, but I guess this one's an old school one, so this is just meant for just Xerox only.
right.
Okay. I don't know. It's a pretty cheap copier, no? Is it? Yeah, it's only $500. Let me see. Copier.
Yeah, it is, it's a copier.
Yeah, it's only for a. Well, that's like pretty expensive.
This is not, yeah, that's not, nothing to sneeze at.
Yeah. So
Printer, the printer is actually cheaper, $350.
yes. So I don't know. Mr. Sanchez created this, so I don't know. But yes.
That explains it all.
Okay. So checking because we wrote a check.
Yes.
Okay, and we know how much for. So in this case,
Yes.
we know everything. Who did we buy this from?
Computers are us.
Computers are oopsies, I think I put a comma. Computers are us, comma. And the check number is 1501.
Oh, two.
02. 1502. Okay? So at least I know that much so far because it says it on the receipt right here. Okay? So let's go ahead and first go to our chart of accounts and make sure that our accounts even exist. Are we sure we have a computer? Are we sure we have this? Or are they all office equipment?
Oh,
Okay?
But what happened to the tax?
We'll see.
Oh,
Okay?
just wait for it.
Yes, just wait for it.
let's see.
So my
The copier, the copier is 14030,
okay,
and, the printer is
20,
1400, yeah, 20, or 14020.
and the printer is 1410. Okay, so let's go ahead and indicate those accounts.
Computer.
All right. Now, Lee proposed an interesting question. What do we do with sales tax? Do we need a separate account for sales tax? Question to you. Are we paying sales tax or is someone paying us sales tax that we're going to have to later owe?
We're paying sales tax on this side.
We're purchasing it,
We're purchasing it, so it should be included, right?
yeah,
Into our asset.
right.
Do we need to have a separate account for sales tax?
No.
No, because
Just-
Yeah.
Each one just add the tax with it, and that's the whole thing.
exactly. Good. So we do not need a separate account for sales tax. Reason being is because we're paying into sales tax. As in, my asset cost is going to cost me $16.95 plus tax, and I'm paying towards the tax. I'm not collecting tax from my customers and paying it to someone else. Okay, I'm not creating a liability. Okay, I'm paying my tax dues. Okay, I'm the one that's paying. So therefore, I include my tax into the item that I purchased. because that's considered included in the total asset cost. Okay, I don't know if that makes any sense or not. So again, how do we solve for each individual one? Hello?